Hello everyone. Welcome to my YouTube channel Indian Bull vs Bear. In today's video, I'll share my analysis of historical trends of the edible oil sector. This video is part of the series The Final Missing Piece. Before moving on, please read the entire disclaimer carefully. The edible oil sector in the Indian stock market comprises of companies which are involved in refining, processing, packaging and distribution of oils like palm, soya bean, sunflower, mustard, groundnut and rice bran. India is one of the largest consumers and importers of edible oil globally. A large portion, approximately 60% of edible oil in India, is imported, especially palm oil from Indonesia and Malaysia and soybean oil from Argentina, Brazil. The key growth drivers of the sector are the population growth and rising income. Also, health awareness is pushing demands for refined and blended oils. The government supports the sector with policies on import duties, stock limits, and subsidies. The major challenges that the sector is facing includes price volatility in international markets, heavy import dependency, policy intervention, and low pricing power due to commoditized nature of the product. So now in order to identify trends in this sector, I will present two graphs. They are the end result of my analysis of the share price movement of last 10 years of top 10 companies of the sector. The top 10 companies of the sector comprises of 3 large cap and 7 small cap companies. The first graph will show the yearly returns, whereas the second graph will show the monthly returns. So let's check out the yearly returns graph. So this is the yearly return graph. The green bars here shows the positive yearly returns. The red bar shows the negative yearly returns. The orange line down here shows the cumulative returns. The green line shows the number of months with positive returns, whereas the red line shows number of months with negative returns. So let's start with 2015. 2015 was an outstanding year for the sector, and the sector managed to give 150.42% returns in 2015 with 10 positive months and only 2 negative months. 2016 too was a decent year with the returns of 21.14%, 6 positive months and 6 negative months. 2017 again a good year for this sector. The sector managed to give returns of 54.49% in 2017 with again 10 positive months and only 2 negative months. But 2018 and 2019 were bad years for the sector. In 2018, the sector managed to give negative returns of minus 14.63% with 7 negative months and 5 positive months. The situation worsens in 2019 though. The sector managed to give returns of negative 31.71% with 7 negative months and only 5 positive months. And the situation turns on its head in 2020, and the sector managed to give returns of more than 200%, 206.73% in 2020, with 9 positive months and only 3 negative months. 2021 was again a very good year with almost 100% returns, 96.57% returns in that year, with 11 positive months and only 1 negative month. 2022 too was a good year for this sector, and the sector managed to give returns of 36.42% in that year with 8 positive months and 4 negative months. 2023 was a dull year, below average year for this sector. The sector managed to give returns of only 13.16% with 7 positive months and 5 negative months. Then 2024 was a very, very good year for the sector, and the sector managed to give returns of more than 120%, 120.19% in that year, with 10 positive months and only 2 negative months. If we check the cumulative return and follow this orange line, unimaginable returns, 5,499.95% returns, which means 55.5%. Sorry, 55.5 times in last 10 years. Mind boggling number. Let's see the key takeaways. So the first is the cumulative term we have just seen, that 55.5x. in the last 10 years. CAGR of 49.5% in last 10 years. Oh my god. Absolutely crazy CAGR. 49.56% over the period of last 10 years. Net negative yearly returns. So 2 years get net negative, give net negative year return, and the 2 years were 2018 and 2019. Best year was 2020 with more than 200% returns of 206.73% with 9 positive months and only 3 negative months. The worst year was 2019. Clearly, the sector managed to give negative returns of minus 31.71% in that year. And finally, positive to negative year ratio is 4 is to 1, so a decent one. 4 positive years against every one negative year in the last 10 years. Let's see the monthly returns graph. So this is the monthly returns graph. The red bars over here shows the negative mean monthly returns. The green bar shows positive mean monthly returns. The green line shows the number of years with positive returns, whereas the red line shows number of years with negative returns. So January clearly the only month which has average negative returns over the last 10 years for this sector. So January managed an average of minus 1.01% returns over the last 10 years with five positive years and five negative years. February 2, almost a flat performance of 0.45% average return on the last 10 years with again five positive and five negative years. The situation started to improve once we marched towards March, and the average returns are 2.02% with seven positive years and three negative years. April is absolutely crazy month for this sector, and by far and clearly the best of all with 11.46% average returns, and 10 out of 10 times in the last 10 years it has given positive returns in April. Absolutely amazing data. May again a good year, a good month with 4.05% average returns with six positive years and four negative years. June even better than May with 5.69% average returns, six positive years and four negative years. July, I would say an average month with 2.32% returns, six positive again and four negative years. August, um, above average 3.7% returns, but five positive and five negative years in the last 10 years. September, a dull month, a flat month for the sector with almost no returns, average returns over the last 10 years of 0.08% per year in the month of September. Seven uh, positive years and only three negative years. So that is a good point though for September. October, a very good month with 5.56% average returns, seven positive and three negative years. November, another solid month with 3.2% average returns and eight positive years and only two negative years. And finally, December, again, a very good month for this sector with 9.94% returns and nine positive years and only one negative year. So, all in all, a very good graph. Only one month which has an average return in negative, and there are couple with flattish performance like February and September. Let's see the key takeaways. The cheaper months are January, February, and September. So January with negative returns, February with flattish returns, and September with flattish returns. Costlier months, April and December. So clearly two of the best months for this sector. April with 11.46% average returns, 10 out of 10 years positive returns. And December with almost 10% average returns, 9 out of 10 positive years. So very good, clearly very good months for the sector. And finally, positive to negative month ratio is 2.08 is to 1. Very good figure So that is more than two positive months against each negative month in the last 10 years, that is in the last 120 months. Very good number for the sector. So that is all from my side in this video. Thanks for watching it. And if you like the content, press the like button, subscribe to the channel, and share it with your family and friends. I'll be back soon with another video. Goodbye for now.